Yes, that is correct. If you do not pay your property taxes, they will take your land. And it's not a matter of can they take your land, it's they will take your land. So the question is it really your land? So do you ever really legally own the property? Some would beg to differ. Some say no, some say yes. Whatever you think, leave us a comment below because we're just curious what you think about that. Legally, technically, you do own the property. Unfortunately, there's stipulations in there that if you don't pay your taxes, they can take it. It's really simple. If you don't pay, you don't stay. So it's quite simple. You have to pay your property taxes. You have to pay in accordance of whether or not you're in the city or the county or the parish, and you basically sign those documents, and it takes 9 to 10 to 12 pages of those documents when you purchase a piece of property that basically says, like I'd mentioned before, if you don't pay, you can't stay. You have to pay your property taxes. Now, if you don't pay your property taxes, they will give you a notice of what they call seizure. They will seize your property. Now, they don't have to take you to court or anything like that because you signed the documents giving them permission to do so when you purchase the property. You said, basically, I'm a big boy and girl and I'm an adult and I'm gonna pay my property taxes. But if I get behind on my property taxes, you're welcome to take the property. So what happens if they take your property? You got this beautiful piece of land and they took your property. They gave you notice that they're going to take your property. You know they're taking their property. They give you a specific date and a specific time of which they're going to seize your property. Now, once they seize the property, they will sell your property. That's correct. They will sell your property. Now the big question is, what happens when they sell it? Well, they basically sell it to anyone that wants to come to the courthouse on the sell date. They typically do it once a year. They sell off the property. They'll sell off the property for what they need to sell the property for based on the amount to pay the taxes that you're delinquent on. Now the good news is even though they take your property and they seize your property and it's now theirs, you can get the property back. They call that the redemption period. You get to redeem your property back from the county or the parish or the city that basically took the property because you didn't pay your taxes. Now all states, what they have, the right of redemption period, the right of which you can redeem your property. It's anywhere from 3 to 5 years. Take for example like Tennessee or Louisiana, Alabama, it's 3 years. Some states like California, Oregon, it's 5-year right of redemption. So you have anywhere from 3 to 5 years, but truly it depends on your state of how much time you have to redeem your property. Now the cost to redeem your property, your land, so you have this redemption period, the cost to redeem your property, your land, you have to basically pay the person back that bought it from the county or the parish that sold the property. Not only do you have to pay them back, but you're paying them back plus a little bit of interest, typically around 5 to 6%. So they'll add in a 1% penalty, and then you have to pay the person back with interest because they basically bought your property, holding on to your property. And a lot of these investors, they buy the property and hold the property in hopes that you don't redeem the property. Now keep in mind, most of these are real estate investors that buy these properties and these tax sales as they call them. Once they buy the property, they're basically buying the property for what's owed in back taxes. It may be a piece of land that's worth say $100,000 and they're buying it for $15,000 in back taxes. Now to be able to get your property back, you got to pay the $15,000 that you owed in back taxes plus a 5 to a 10% penalty. All of that's going to be based on the state, the city, the county, the parish that the property's in. Now the real good news is you get to redeem the property, you get to purchase the property, get the property back. Some people get behind on their taxes and they can come up with the money and they can redeem that property so you can get your property back. Now if you don't buy your property back, it's quite simple. The property's lost on the very first day after the end of the redemption period, and at that point forward, the person that purchased that property, it's their property, they own it, and there's nothing you can do about it. Now keep in mind, the states that sell these properties, they're looking to sell the property basically to get what's owed on the taxes. So think about that. If you owe back taxes and you hadn't paid taxes on a piece of property or home, piece of land, whatever it may be, let's say you hadn't paid taxes in 3 to 5 years and it's accumulated some 15 or 20 grand. They're looking to just sell that property, and it's kind of an auction state, if you will. They'll have a set address. They usually do it just one time per year. They put everybody on public notice. Anybody can show up and do it. And they basically just, at a courthouse or in a courtroom, they'll say, we're going to start the bid on this property. Here's the legal description. And the bidding's going to start at this. What they're trying to do is just basically get any back taxes that hasn't been paid on the property for the property. However, the bidding can go a little higher, but that's up to the buyer and what they're willing to pay. So now you're looking to redeem your property, you want to get your property back. You have to understand that now that that person purchased your property, if they purchased your property for say $25,000 and you owe just $12,000 in taxes, you have to pay them what they bought the property for. So it's going to cost you more than just bringing your taxes due to redeem your property. Think about that before you stop paying your taxes. And look, as I mentioned before, a lot of people are like, Wayne, it's not fair. You really, truly never really own the property. It's not yours. They own it. The government owns everything. And listen, I get it. I totally understand at the end of the day. But you also have to consider there's schools, there's roads, there's infrastructures that we drive on. So there's two sides to every coin. But your opinion matters, and so do your comments. So let us know below and give us your thoughts. Now here's a crazy scenario. A lot of people don't realize this, but there are actually 13 states in the United States that when they seize a property, they will sell that property at what they call their auction state, just like any other of the 46 states. I hope I did the math correctly, but you get it. What I'm trying to say is they can take your property, they can sell it, they can make a profit and not have to give you the money back, not have to give you the profit. Now keep in mind, they seized your property. They took your property because when you bought the property you said, okay, if I don't pay my taxes you can take it. They take your property. Now they have the right to sell your property. They sell your property. Let's say you owe $15,000 in back taxes. They sell your property for $100,000. Now they sold your property for $100,000. In most states, in 46 states, if they were to sell your property for more than what you owe in back taxes, say $15,000 back taxes, they sell it for $100,000, there's 85 grand. They actually mail you a check for the equity. They mail you a check for the profit that's made. That city, or that county, that parish, they don't keep the profits when they sell the property. However, there are 13 states, 12 states, one is the District of Columbia, that if they sell your property, they profit the money and you get nothing. Now, needless to say, that's got a lot of people pretty chapped, because there's been millions and millions and millions of dollars where people have basically gotten behind on their taxes and the property sold. Not only do they sell the property, but they profit. And there's municipalities that have made millions and tens of millions of dollars where they basically take a property back, you don't redeem it, they sell it, and they profit and never give the money back to you. So has this ever happened to you? I know it's really frustrating, but have you ever had a property be seized, or maybe you have a friend or a close family member that the property was seized and they never got the property back? They were not able to redeem the property. The property was sold. It was sold for a substantial amount of money, and that person never received not a cent back from the sale of that property. So listen, the reason why we want to know this is because it's going before legislation right now as we speak. What they're trying to do is to get those 13 states to be changed to where if they sell the property for a profit, the money that they sell the property for goes directly to the property owner that previously owned the property that had it seized. Now, of course, as mentioned, if you don't redeem the property and they keep the property after purchasing the property, they can do whatever they want to with the property. But if you're someone thinking, well, wait a minute, Wayne, what is the process of actually buying some of these properties? Now look, you can do just that. You can buy these properties. All you have to do, if you really want to know when's the date of these properties, and it's going to be different, is to contact your local city and county and ask them, when do they do the tax sales for properties in real estate? They'll gladly give you that information. Most of the time it's on a website that you could just Google. Now, it's important to know that anybody that buys a piece of property this way, you can't do anything with it. So it's not like it's your property. You can go live in it, you can go homestead on it, because oftentimes these properties are seized and they have to give notice of seizure, and they're supposed to basically vacate the property. However, you'll have people all around the country that just because their property was seized, they still won't vacate the property. Quite simply, this means that you bought the property, you own the property, but you can't do anything with the property. You're just holding on to the property. And most people are okay with that because they're thinking, well, if they redeem the property, I'm going to make some money back. If they don't redeem the property, then I've got a property that I can turn around and sell. And believe you me, I've had investors to buy property. I've never personally bought a piece of tax property where the person did not redeem, but I have had clients to do that, and they've made substantial profits on buying those properties that have been seized at a tax sale where the seller did not redeem their property. Actually, not the seller, the homeowner did not redeem their property. So look, I know it can be pretty frustrating. A lot of people are like, well, you don't ever really own your property. Try not paying your taxes for 2 or 3 years in a row and they will take your property out from under you. But legally, technically, it's your property. Unfortunately, we all just have to basically pay, unfortunately, our share of taxes.